Are you an investor looking for premium market opportunities? Presenting premium and exclusive service for investors by Kalkine.
A mortgage loan can be a definite facilitator for your dream of owning a residential property. It can be very simple to avail a loan facility if your credit rating is good. But there is more to a mortgage than the upfront lump sum or the interest charged by the lender on the borrowed sum. There are some do's and definitely a few don'ts that you must consider. Here, let's discuss 3 don'ts, 3 common mistakes that one must steer clear of when taking that big ticket decision of buying a house as an abode for the self or as an investment asset. First of all, no haste. The housing sector of Australia is a developed market with ample opportunities for all stakeholders. Did you know that mortgage is one of the primary sources of revenue for the big 4 banks of the country? This simply means that the market is quite open and there's no reason to rush into getting a mortgage. It's wise to first study all the aspects, from the neighbourhood where the house is located to your financial position to how the mortgage facility will impact you over the next 20 or even more years. Sometimes, a buyer is likely to assume that opportunities in the housing market are limited. This often happens when the market is hot and prices are rising. For example, in 2021, Australia's housing sector was too busy. However, things do calm down after some time. This means that due diligence cannot be ignored only to quickly close a deal. Ask yourself why. Another very critical aspect that cannot be overlooked is why you want to make a purchase. Ask yourself, is it just the urge to own a house downtown that you're willing to enter into a long-term borrowing arrangement? Or is it a genuine need which is adequately supported by your financial health? Be it a small purchase like a new smartphone or a big ticket purchase like a house, there must be a reason to justify it. Don't forget that a mortgage loan is both lengthy and weighty. Therefore, you should always weigh up the pros and cons and look not to be impulsive when deciding on a purchase. The upfront part. One might always be tempted to pay a little bit less in upfront costs. Usually, in a house purchase, nearly 20% of the total amount is paid up front, while a mortgage facility can be availed for the remainder. However, there are lenders willing to let the borrower have access to increased credit, which does nothing but add to the total interest to be paid over the lifetime of the loan. So if you can afford it, simply don't shy away from paying it up front so that the borrowed part is lighter. By doing this, you would add to your savings by not having to pay that extra interest on the otherwise borrowed money.